There's no way they charged her $60,000 for a 2020 C300. And the worst part is, the credit is really what's hurting her. This is what happens when confidence ignores math. She bought the car last Friday. A 2020 Mercedes C300, 60,000 miles, and somehow the total cost is showing around $60,000. Now, let me explain this in a simple way. A lot of people don't get robbed at the dealership because the dealer is too smart. They get robbed because they don't understand what they're signing. They look at the keys. They look at the car. They look at the monthly payment. But they don't look at the contract. And that is where the damage happens. Because on paper, she didn't just buy a car. She bought fees. She bought add-ons. She bought Gap. She bought a service contract. She bought a theft package. She bought confusion with leather seats. The car was already overpriced. Then they added thousands of dollars in extra products. And by the time she realized what happened, she had already signed. That is the first lesson. Never wait until after the deal to understand the deal. Because once your name is on that contract, now you're not asking, should I buy this? Now you're asking, how do I escape this? And those are two very different questions. Now here's where most people make the next mistake. They buy a car one week, then realize it does not fit their life, then immediately want to trade it. She bought the Mercedes, then said she needed something kid-friendly. That is a normal thing to think about before buying the car. But when you skip the thinking part, you buy first. Question the price later, then remember what the car was actually for. And now the dealership has all the leverage because you just bought the car. It already depreciated. Now you have to get it appraised again. And if the car is worth less than what you owe, congratulations. You are now upside down. And negative equity is one of the fastest ways people trap themselves in bad auto loans. Because that money does not disappear. If you owe more than the car is worth, the difference has to go somewhere. Either you pay it out of pocket, or you roll it into another car, or you keep making payments until the loan balance comes down. Those are the real options. Not the emotional options. The real options. Now here is the part people don't like hearing. If your credit is bad and you have no money down and you're already trying to trade out of a bad loan, the dealership is not trying to save you. The lender is trying to protect itself. That is why credit matters so much. Because when your credit score is low, the bank sees risk. And when the bank sees risk, you pay for it. You pay with a higher interest rate. You pay with a bigger down payment. You pay with worse terms. You pay with a higher monthly payment. And sometimes you pay by getting pushed into the only car they can get approved, not the car you actually want. In this case, the credit score was around 545. No money down. No cosigner. And trying to stay around a $350 to $400 payment. That is not a car deal. That is a wish list. With a 545 credit score and no money down, the lender is not looking at you like a buyer. They are looking at you like a problem they need to price correctly. That is why they start talking about $8,000 to $10,000 cars, high miles, older models, not because they hate you, because your credit file is telling them the risk is too high. Now this is where credit repair comes in. Before you try to get another vehicle, before you apply at 5 dealerships, before you let every lender pull your credit, you need to fix what is hurting your report. If you have collections, get them reviewed. If they are inaccurate, outdated, duplicated, or unverifiable, work on removing them. If you have charge-offs, check the balance, dates, payment history, and reporting details. If they are reporting wrong, dispute them. If you have hard inquiries you did not authorize, remove them. If you have late payments reporting incorrectly, challenge them. If old addresses, wrong names, or mixed information is connected to negative accounts, clean that up too. Because every negative item makes the bank more nervous, and the more nervous the bank gets, the more expensive your approval becomes. This is why two people can buy the same car, but one person gets a normal payment and the other person gets financially punished every month. Same car, different credit file, different result. Now here's the surprising part. A lot of people think the car payment is the problem, but sometimes the car payment is just the symptom. The real problem is the credit report. Because if your credit is damaged, you don't walk into the dealership with power. You walk in hoping they can make it happen. And when you are hoping they can make it happen, they control the deal. They control the car. They control the lender. They control the terms, and you control the regret later. That is why you do not fix a bad car loan by rushing into another bad car loan. You fix it by stepping back. Pull all 3 credit reports. Experian, TransUnion, Equifax. See what is reporting. Collections, charge-offs, late payments, repos, hard inquiries, high credit card balances, wrong personal information. Then you build the plan. Because if your score is 545 today and you keep applying for cars, you may not be helping yourself. You may just be adding more hard inquiries. And more hard inquiries can make the report look even more desperate. Then the lender looks at your file and says, low score, no money down, too many inquiries, collections, charge-offs, high debt, and now the approval gets worse. This is why credit repair should happen before the next application, not after the denial. Now let's talk about deferment. A lot of people hear you can defer your car payment and think they found a solution. But deferment does not mean the payment disappears. It means the problem takes a short vacation. Then it comes back, sometimes with interest, sometimes at the end of the loan, sometimes with more pressure later. So yes, if you were about to miss a payment, calling the lender is better than ignoring them. Because a late payment can hurt your credit badly. A repo can destroy your approval chances for years, and one missed payment can make your next car loan much more expensive. So communication is important. But do not use deferment as a lifestyle plan. Do not defer a car payment so you can go spend money somewhere else. Do not defer a payment so you can buy more things you cannot afford. Do not use temporary relief like it is extra income, because it is not extra income. It is delayed pain. And if you already have bad credit, one more late payment can make everything worse. Now here is another dangerous idea. Using credit cards for a down payment. This is where people turn one bad debt into 2 bad debts. They are upside down on a car. Then they want out. Then the plan becomes, let me max out my credit cards for the down payment. That is not a strategy. That is just moving the fire from the garage to the kitchen. Because now you still have the car problem, plus credit card debt, plus high utilization, plus a lower credit score, plus less chance of getting approved at a good rate. Credit card utilization is a big deal. If your cards are maxed out, your score can drop. And when your score drops, the auto lender gives you worse terms. So now the thing you use to help you get approved can actually make the approval worse. That is why I tell people this. Before you apply for another car loan, clean your credit report. Lower your credit card balances. Save actual money down. Then shop for the car, not the other way around. Because bad credit plus no money down plus negative equity is one of the worst combinations in auto financing. That is how people end up with a $40,000 car on a $1,000 monthly income. And that is not transportation. That is a math problem on wheels. If your car payment and insurance are eating your whole income, you don't own a car. The car owns your paycheck. And at that point, the goal should not be another approval. The goal should be damage control. So here's the real process. Step 1. Stop applying everywhere. Do not let every dealership run your credit. Do not keep stacking hard inquiries. Step 2. Pull all 3 credit reports. You need to know what Experian, TransUnion, and Equifax are showing. Step 3. Find the negative items. Collections, charge-offs, late payments, repos, hard inquiries, wrong balances, wrong dates, duplicate accounts. Step 4. Work on removing or correcting anything that is inaccurate, outdated, duplicated, unverifiable, or not yours. This is where credit repair can help. Because if those negative items come off, your score may improve, and if your score improves, your approval options may improve. Step 5. Lower your credit card balances. Do not max out cards for a down payment. That can hurt your score and make the deal worse. Step 6. Build money down. Because money down gives you options. No money down with bad credit means the lender controls the deal. Step 7. Then look at your car options. Maybe you refinance. Maybe you sell private party. Maybe you keep the car and pay it down. Maybe you trade later after the credit improves. But do not rush into another bad deal just because the current deal hurts. That is how people stay stuck. They use the next car to hide the last mistake. But the debt is still there. It just has a new steering wheel. So if you have bad credit and you are trying to get approved for a car, do not start at the dealership. Start with your credit report. Because the dealership can only work with the file you bring them. If that file has collections, charge-offs, late payments, repos, and hard inquiries, you are going to pay for that. But if you clean the report first, remove the inaccurate negative items, fix what is reporting wrong, lower your balances, and stop applying everywhere, now you give yourself a better chance. Better credit can mean better approvals. Better approvals can mean lower interest. Lower interest can mean lower payments. And lower payments can keep you from turning transportation into monthly punishment. So the lesson is simple. Do not sign first and understand later. Do not defer payments like they disappeared. Do not max out credit cards for a down payment. Do not keep applying with a damaged credit report. And do not let bad credit force you into a bad car deal. Fix the credit first. Then shop for the car. Because the goal is not just to get approved. The goal is to get approved without getting trapped.